the art of the deal. For me, it's fun, and every institution is different, but everybody is going to give a different answer depending on what institution they're at. In my world, and part of the reason why I left the banking world, is I get to represent the client for them, and I get to work with my lending partners who all look at it differently. They can throw out a great rate here, but they're not going to meet the requirements that my client needs here. And we get to collaborate and find out who's got the best program for them. And it's really, at the end of the day, it's about the client.
Hey everyone, welcome to another episode of Commercial Connections Investing with Confidence. I'm Rene, the producer of the show, and today we have a very special guest joining us, Justin Huelshoff. With over 25 years in banking, Justin is a powerhouse in commercial lending, helping businesses secure the right financial solutions to grow and thrive. Whether it's commercial real estate financing, acquisition loans, SBA lending, or even franchise and construction funding, he's built a reputation as a trusted partner who finds creative ways to get deals done. His approach goes beyond just lending. He's committed to being a long-term financial ally, helping clients navigate their ever-changing market with confidence. Leading today's conversation is your host, Rene Nelson, an award-winning CCIM in the Eugene, Oregon area. Thank you so much for joining us, Justin.
Thank you. Thanks for having me.
We're excited, Justin.
Thank you, Rene.
You were a banker. Now you're a commercial lender, a commercial broker.
Yep.
Explain to us what the difference is. How does a banker versus a broker, how does that work?
Yeah, so I was a banker my entire career, 25 years, up until just about a year ago. The difference between a commercial broker and a commercial banker, we are still working with our clients to find the right money. The difference is I don't represent a bank, I represent the client. And what that means is if you are a commercial banker, you represent the client, but you also represent the bank. And a bank, you have to meet certain criteria to be able to lend money at that bank. As a broker, I get to go to all different types of lending institutions to find the right money for my clients. I fully represent the client, not the bank. We go find the right bank or institution for their project specifically, and I'm representing the client wholly. Once we do find a bank or we find a lender to do their project, then we commit to that lender to go with them to get our client's project to the finish line. Like I work directly with the banks, whether it's a credit union, whether it's a traditional bank, regional, national, SBA lenders, Fannie, Freddie, HUD lenders, all different types of lenders, and it's really going to be specific to the client's project.
Okay, that makes sense. What are some of the biggest challenges that you're seeing facing your clients right now with SBA and conventional loans, business equity line of credits?
I think the biggest thing is getting the right access to the right capital. The lending environment right now is really hard to navigate for anybody out there trying to get a loan, whether it's on their building or for their business. Equity lines, that's a completely different story, which we can touch on that one later. The landscape of lending in particular with every institution changes all the time. And it's really hard to find out who is doing what. And not only that, the pricing's all over the board too.
So let's say I'm an investor. I want to buy a 20-unit apartment complex.
Yep.
Why would I come to you?
Part of the reason why you would hire me or hire somebody like me is so that way we can go out and test the market and find out who has the right money, as in rates, fees, terms, how they're going to structure it. Some banks are going to want to, or lending institutions are only maybe going to want to do a 25-year amortization schedule. Some of them will do 30, which they can get, more for your money. Rate's super important right now, especially for investors. If they're going to their traditional lender that they've used in the past, say their rate's at 7.5, but there's lenders out there that's offering close to 6 or even below 6 at certain projects, that changes the rate of their return on their investment, which
Mhm.
is really important, which also protects them and making sure that they're getting the maximized return on their investment. So going with somebody like me, I get to represent the client wholeheartedly, where my goal is to make sure that I'm taking care of them and their project to protect them long term. And I'm not saying that the banks or credit unions or whoever it is, they don't have the same intention. But if you're only at one place, it literally gives you one solution, right? One answer. And sometimes that may not be the best answer for them or the best solution for them. So really, I'm giving them the opportunity to really find what's truly the best for them.
Yeah.
Yeah.
So somebody wants to buy an apartment complex, as an
Yep.
example. They call me and say, "Hey, I want to buy a 20 unit." And I always
Yep.
say, "Okay, are you going to pay cash?" "No, I'm going
Hmm.
to need financing." "Have you talked
Yep.
to a lender yet?" "No, I haven't." So I'm going to refer them to you to
Yep.
get pre-qualified. Now,
Uh-huh.
let's talk about that, because
Okay.
there's a difference from the residential world where you could call up your favorite bank, lender, credit union and
Right.
say, "Hey, I want to go buy a house, pre-qualify me." In Justin's world, the underwriters are not keen on doing that because there's the underwriting process. And I want you to speak to this, Justin. It's really complex.
Right.
So you want to see up front typically a personal financial statement because you're looking for what they call global liquidity. You want to see how much cash they've got, right?
Correct.
Talk about
Correct.
your process.
That's a really good question. So one thing that I do is when I'm working with a client, I'll collect a full financial package, typically 3 years personal tax returns, depending on their situation. Maybe they have other companies, because I do work on all asset types. Yeah, I know you mentioned multifamily, but I do work on owner user, investor. At the end of the day, unless we're working on a project that is going to be non-recourse, which means that they don't have to personally guarantee, the one thing that all the lenders are going to look at is their personal liquidity and what they look like as an individual, right? So we want to really understand what our client looks like. So then that way, when we go to our lenders, they can really see under the hood and take a look at the full picture. There's two parts to this. So, Rene, if you have a client that wants to buy a 20 unit apartment, and whether they have experience or they don't have experience, getting their financial picture to see what they look like is super important. Personal financial statement. Like I said, 3 years tax returns, understanding what their personal position is really important. And also seeing where their assets are, seeing kind of where their down payment and where personal assets, their liquid assets, because that's going to be really important. Whether it's coming from cash, 1031 exchange, or maybe there's multiple partners, knowing who the borrower is key. The next part to that would be the asset that they're buying. If they're going to buy a 20 unit apartment, the performance on that apartment is going to be really important as well. Because the lenders, for the most part, are not only going to look at them personally, they're definitely going to look at the asset. The key to winning on something like that is going to lenders that lend in that space particularly. And it doesn't matter what kind of asset it is. Could be multifamily. You do a lot of student housing, right? Which would be a lot like multifamily. Could be special use properties. They're definitely want to see what the performance is on that property, but we also need to make sure that we have a qualified borrower as well.
Can we talk real quick about
Yep.
liquidity? Because I'm
Yes.
curious, when you're helping the client put
Yep.
together the financial statement, because
Yep.
you're ultimately trying to ring the bell with the underwriter for the institution, how
Yep.
do they look at like stocks, and do they count that as liquidity, or do they say, no, that's tied up in the stock market? We see it as an asset, but it's not liquid.
It depends on the institution. Everybody underwrites differently. I can't speak for every single place, but if that could be converted to cash, that's treated more as cash than retirement would be. Usually, if somebody's at retirement age, the financial institutions will look at their retirement portfolio as cash potential because they could use it. Now, if they take the money out, sure, there's going to be some
Mhm.
taxation. I'm not a CPA, not an attorney, but that is money that they have access to that if you are under retirement age, you have access to it, but there is also a 10% penalty and some
Mhm.
other things. So, yes, if they have money in stocks, they have money in a portfolio that could be liquidated at any time, that could also be taken into consideration. Plus, it also strengthens their net worth. Financial institutions really like to lend to people that have assets, liquidity, equity in their home. Like they're not necessarily going to grab
Right.
assets,
Mhm.
but they do want to make sure that they're lending to somebody that also is solid and there's not as risky, I guess.
So yesterday, Justin, you and
Mhm.
I attended the CCIM luncheon in
Yep.
Portland, Oregon for Oregon Southwest Washington, and it was an appraiser panel, and they were talking about how few of SBA appraisals that they've done in the last 12 months. Why are SBA loans changing? The appraiser said 2 years ago, that was primarily all of their business. But now it sounds like one appraiser said he's only done two in the last year. What's changing in the SBA world?
That panel specifically, when they said that, I was a little bit surprised because, like, on an owner user, you either using conventional or you're using the SBA. If you're going to buy a property, most likely, if you're using financing. And we do a lot of SBA. I'm seeing a lot of it on my end. So I was a little surprised by that, but I will say, building off of that, there's less SBA, say 7A programs that are being used right now because the interest rate, it's usually tied to prime. A lot of SBA lenders use their index, which is Wall Street Journal Prime, which right now is at 7.5 plus 1, 2, or 3%. So 2 years ago, when prime was at 3, even if there was a spread of prime plus 3, you're at 6%, right? Which is great. But those are variable rates. Now, where prime was at, it's at 7.5 right now. It was at 8.5. Rates went from, say, at the highest, from 6% up to 11.5%. Your purchasing power has changed completely. That is probably a big reason why they haven't seen that in the last couple years. Now, me as a commercial loan broker, I work with lenders that some are at prime minus, some of them are at prime, some are at prime plus, and it depends on the client situation. The biggest change is a lot of financial institutions that have SBA 7A programs are usually a prime plus. And when they're at prime plus, their purchasing power changes considerably. That could be the other thing is SBA 504. So there's two programs. You got 7A, you have a 504 program. The 504 program, you have a traditional bank that's doing the 50% loan under traditional pricing, which could be anywhere from 6 to 8% depending, or even higher depending on the institution. And then the SBA, which is the CDC portion, which is 40% of that loan, is tied to an SBA rate that changes every month. And those rates are finally starting to come back down. So I think that there's probably going to be a lot more 504. The appraisers are probably going to see a lot more of those programs than they would the 7A adjustable rate programs that they saw 2 years ago when rates were super low.
Okay, so walk the listeners through again
Okay.
on SBA. So you've got
Yeah.
one program where a bank does 50%, and then the
Yep.
SBA dovetails on top of that, kind of in a second position, and
Correct.
they'll go up to 85% combined loan to value. How high?
Yeah, no, typically that one goes to usually 90%. So where
Okay.
the bank will be at 50 and then the SBA portion will be at 40. So like in the consumer world, if it used to be really popular that people would buy their house and they'd do a first and second purchase. I don't know, I don't want to nerd out in this too much, but it's kind of the same way. And on the SBA 504 side, a lot of banks like this program because then the bank is only carrying a note for
Mhm.
the first 50% loan to value. They're protected because they're in first position. And then that SBA portion is that other 40% where that's an SBA backed guaranteed loan through the CDC, which could be Evergreen. I want to say there's a number of institutions that facilitate these seconds. And then the client then would have a mortgage payment of a first and a second, just like you would if you did on your home and you use that same type of program.
Do you think the SBA underwriting process is tougher than, say, a conventional underwriting process?
Yes and no. It's extra paperwork for sure. When you do these 504s, you have the bank that approves it, and then you have the CDC that approves it, that is going to facilitate the SBA loan. So you basically have to get two different approvals, right? And if I can go back to the other program, which is a 7A program, which is one loan, it's one approval, right? So anytime you're using a government program, yes, there's going to be additional paperwork. The appraisals are going to be a little bit different. I don't want to say it will be scrutinized a little bit more. It's just a little bit different of a process, and it's just a little bit more stringent,
I
because
had a little bit of a horror story I'd love to share about
I
SBA.
I would love to hear it, and I bet I could probably share some with you too, but they're there for the right reason, right clients, and at the end of the day, when I'm doing an owner user project, it's really going to come down to how much they have as a down payment, what they need to preserve their cash. So then that way, when they do make this transition, that they're going to be in the best possible position to be successful in that new facility. But Renee, I would love to hear. Do you want to share your horror story or?
Sure.
Okay.
Probably 3 or 4 years ago, I
Uh,
had a very large company here in the Eugene Springfield area that wanted to buy an industrial campus. And it was really pivotal for them because they were a tenant in one of the buildings. They had a milling facility and they were just growing on top of themselves and they
okay.
had an online presence and they really needed more space. So this industrial campus fit their need, but I mean, it was a pretty big purchase price, like 11 million
Okay.
range. And we decided that they were going to do an SBA loan through their bank. And ironically, there were two different railroad spurs, not in use, but two different railroads that touched the property.
Hmm.
And the loan officer didn't catch that. And it went up the process to SBA, and SBA said, oh, well, you've got two different railroads touching this property. That diminishes what we're willing to loan. And
Hmm.
on 11 million, that's a big whack. And it was about 3 days before closing. I mean, the horror story. So I just appreciate people like you who are in the lending business that live or die every day on getting up, whether the underwriter is going to make or break your day. Really, honestly, that was one reason also that I decided to get out of the lending world. I had a lot of executives that were trying to get me to commit fraud, and I was just like, I am so over
Oh,
this.
I guess one strategy is have them talk if they have a commercial banker to start having that conversation with a commercial banking professional and find out are they in the position to buy something? To have somebody look at their financials and look at their overall picture to see are you in a position now to do it? Or are there some things that you can do to get ready for it? And part of the ways to get ready for it, you need to be a qualified borrower, right? And you don't know what that is unless somebody actually looks at your financial and can underwrite fairly quickly on some sort of a budget, right? That would be the first start. The other thing is talking to somebody like myself to understand what the lending programs are because not only do you have SBA programs, but then you have conventional programs and to also understand where their budget sits. There's some SBA 7A programs that will finance up to 100%. And in some cases, it's actually a really good program for the right borrower. But then for some people, conventional is going to be a lot better because of cash flow, because of cash, and then kind of figuring out what that looks like once you have a budget set then you can figure out, do I want to make this investment? And what does that look like in today's world? The tough part is, and this is the one thing in banking that as a junior banker and a bank that I used to work for, they used to not let us underwrite up front. They're like, just send it in. They wouldn't teach some of their bankers about how to truly underwrite it. So they were kind of flying blind. So the tough part is finding a bank and an actual banker that can not only underwrite it and help you set a budget, because unfortunately, it's not as easy as you think it would be for somebody just to go to a bank, meet with a commercial banker, and then also have somebody that has the ability to help them set those budgets, because every institution, they run their programs differently. And what they also allow their bankers to do is different at every institution. And I'm going to be very honest with you. What I do with some of my broker partners or even my clients, if they introduce me to them, is not only educate them, but also help them set a budget and help them understand what it's going to take to invest into a property. Does it make sense financially? There's a lot of different business owners that may have a sweetheart lease that they're only paying $1,000, $2,000 a month, and then going from a payment from that to 5,000 or 10,000 is a significant change, right? And some of the lending institutions will be like, well, you're only used to making a lease payment of this amount, going from 2,000 to 8. Even if the cash flow is there, they're not used to doing it. And it really, like, the art of the deal to me, for me, it's fun. And every institution is different, but everybody is going to give a different answer depending on what institution they're at. So in my world, and part of the reason why I left the banking world is I get to represent the client for them, and I get to work with my lending partners who they all look at it differently, right? They could throw out a great rate here, but they're not going to meet the requirements that my client needs here. And we get to like collaborate with our partners and find out who's got the best program for them. And it's really, at the end of the day, it's about the client. And if we do it right, like, everybody wins. Going back to your original question, what should somebody do if they want to find out more about, is this a possibility? For one, they should definitely go to their bank, but maybe even get a couple of opinions out there. And if they can interview a couple people and the answer is pretty similar, then you have a pretty good understanding about their decision on what they should make. But if you only go to one resource, I will tell you one thing frustrating that I've seen as a banker and seen as a broker, that a client will be told one thing and they think, oh, yeah, well, I can't do it because somebody told me this. I can't do it. That one institution, it may be a rule within their bank or their credit union that they can't do it, but that isn't a definite rule across the board. And I'll use that as an example. I also do acquisition financing too through SBA programs. I had a gentleman that he was a chiropractor. He had an opportunity to buy the clinic he's been with for a couple years. Newer chiropractor, but actually, let's see, newer grad student, I guess. He had an opportunity to buy the practice that he was at. And this practice has been around for a long time. Great cash flow, great clientele, great name. He does half of the work there. He doesn't have a lot of assets. He's younger. He's got some student loan debt, whatever. He goes to his bank, and his bank says, yeah, I'm sorry, you're too new out of school. Nobody's going to lend you any money. Sorry, you're not going to be able to do this for a while. Luckily enough, somebody said, hey, you need to talk to Justin. And it wasn't anybody from his bank. You need to talk to him and see if there's some other options. So he told me then the story about what his bank told him, that he was not going to be qualified to buy the practice. And I said, that may not be true. It may be true there, but that may not be true. Like, everybody looks at the project differently. So I went to market and I found a handful of lenders that wanted to do this because it was a really good practice. He'd been there for a while. Like, he was a licensed professional. Yes, he was short on liquidity, but they were willing to take the chance and structure it exactly the same way that bank would have done it if he was a strong borrower. My only concern about going to one place, you only get one answer, and I'm going to toot my own horn. I get to find a bunch of answers and find out who truly wants to do it because every financial institution, they're going to look at a project differently. And it doesn't matter what the asset type is, they all look at it differently. They have all their own underwriting. And I love, banks and credit unions that are here to help people get to the right place. But just because one place underwrites it one way doesn't mean that is the ultimate rule everywhere else.
I think that's really motivating for people to get a second opinion and younger people not to be so afraid of taking that risk up front.
Justin, if you had one tip for like a piece of advice that you would give to a buyer who wants to maybe start investing and they're a little nervous about the loan process, what one thing would you recommend to an investor? What piece of advice?
If you had to go multiple places, interview a handful of places to find out what their process is and try to get some consistent answers if you can. Don't be afraid of it, but do some research and understand the process so you know what you're getting into, so you're comfortable with it.
And you'll talk to them for free up front, right? And hear their
100%. Like I
situations.
don't, in my process, we don't get paid if we don't deliver. And
Yeah.
at the end of the day, like I said, we represent the client for them. My goal is to help my clients get their project done and get it right. Yeah, I mean, having conversations with investors and buyers up front so they are well informed, so they can make an informative decision is super important. And it's all about relationships and helping people out. But I definitely think if somebody is going to make an investment, talking to somebody like me, I think would be really important to at least kind of get a grasp of what those programs look like and figure out down the road if that is a path that they want to go down.
We need to have you back because we've got more questions.
Yeah, I look forward to the next time.